Hello and welcome to another episode of Fintech Focus TV with me, Toby. Today I am delighted to be joined by someone I've known for many, many years now. We go back to our days in recruitment a long, long time ago. He's transitioned over to the crazy world of Fintech. It is Richard Prime of Sonovate. Richard, how are you?
Good morning, Toby. I'm good, thank you. We've known each other a long time, but how come I'm looking distinctly a lot older than you are?
Because I haven't grown a beard. If I did exactly the same thing, that you can see it coming out there, it would work that way for sure.
Indeed.
Listen, great to see you, and great to see the business continue to thrive, to thrive throughout all of this. I know it's a difficult time for everyone. I'm particularly interested to talk to you because I think you've just got this brilliant vista of what's going on at the moment. It's sort of really privileged area. We'll go into the detail of the business in a second, but you've got this ability to look at the whole of the recruitment sector and see the ebbs and flows of jobs. I'm really interested to talk about that in a sec. Let's kick off with just you giving a bit of a background to you and to Sonovate, if you would.
Yeah, quick backstory, as you kindly mentioned, Toby. We go back a long way. The DNA and the backstory for Sonovate is from the staffing industry. Damon, my co-founder, and I, as you know, worked in the recruitment space since the mid-90s. That was the kind of DNA that led us into Sonovate. As a business, ultimately, we felt that there was an opportunity within the industry. The first industry we understand being the recruitment industry, to provide a funding solution and a technology platform that would just enable that long tail of small and medium-sized businesses in the recruitment space to basically have a working capital product that had the right technology moving forward that could just allow them to focus on growing their business with a product that helps them in the UK, and as many of them start expanding into other geographies and other sectors, we could support them with that journey. So that's really the kind of backstory and DNA for Sonovate.
And it was a remarkable pivot, really, wasn't it? Because I look at you and I'm always in awe of what you guys have achieved from moving into recruitment to really sort of looking at it and that sort of ability to look at the tech and every good fintech is about knowing the industry and being able to provide solutions to real problems. This was a real squeeze and problem in the in the space, and you guys are doing a fantastic job at resolving that, right?
Thank you. Yeah, I mean, look, Toby, honestly, Damon and I did not launch Sonovate to be a balance sheet lending business. I mean, you know me well enough. I mean, the reality was that we had a feel of the technology solution for the whole kind of administration of contractors for this kind of wide market, but it just screamed as a product that needed to be brought to market. So it became that very early pivot that said, actually, we need to do the lending, and if we could build this platform and bring it to market, then we felt that was the big opportunity. So it was, in the end, a really big step away from our sort of 15 years in sector. But I think many of the good fintechs that I know, the product comes out of people that have really been in the heart of the problem, and that's ultimately where Sonovate come from. It wasn't a light bulb DNA moment that we felt that we'd figured something out. It was just we were in the heart of the problem, and speaking to customers, it felt that there was an opportunity there. So that's really how it came about.
I think you see a lot of that in the sort of capital markets and the businesses that spin out of capital markets, vendors and startups in that sort of space. It's people who are there and frustrated and then do that, and it's exactly the same as you guys have achieved, and it's been fascinating. Every time we talk, I love listening to all of that sort of thing, and that's where I think this is so there's so many different angles that we can talk through. So I'm going to sort of try and arrowhead this and figure in for the wider people we're talking to at the moment. I think there's a really interesting point to what Sonovate's doing. Everyone's sat here. We're now filming this at the start of July. We've seen COVID really sort of take a grip in March. April, May, June, big drops across the industry in hiring and such like. You're there and you've got a really interesting view of contractor books across all sorts of industries. Tell us a little bit of insight about what you've seen across a wide spectrum of businesses and what the job market's doing and where the predictions are for, because I know you're good with predictions, but what July and August looks like.
The vast majority of the workers on the Sonovate platform, and I use the word workers broadly because there will be private services companies, some in PAYE structures, even some in umbrella structures. But fundamentally, Sonovate is supporting the supply of white collar STEM sector workers as a general rule of thumb. We have some big technology platforms that use Sonovate that are in some of the obvious boom sectors, like supplying drivers to the likes of a Deliveroo, for example. So they're clearly booming. Everyone can see why there's a demand for that aspect of it. But what we've seen across particularly kind of our big area around IT is that the way I describe it is that the altitude dropped slowly over sort of through April. It wasn't a very, very quick drop. It kind of came through over a period of time, but we see the data at about 26-27% drop since kind of pre-COVID. As many of you know that will be listening, there was a kind of interesting right at the beginning of this IR35 spinning of contracts changing and stuff there. So there was a little bit of muddling of the data there, but we've seen about, call it slightly, high 20% of reduction in utilization of hours works, contracts in play. But we have seen that level out now. So we're about 5 weeks, maybe 6 weeks into seeing the data that suggests the guys and the folks and the contracts that are out there, they're working, they're staying, and it looks like the drops happened to about that level. Particularly, interesting activity around the tech space, particularly anyone that's looking at a forwarding and a kind of move forward on their digital strategy. Stuff there that seems like people are going, right, you really need to move forward here. This is the opportunity for us as a business. So that we see activity. Cloud-based stuff, database stuff. There's again cybersecurity stuff. There seems to be quite a lot of activity around that aspect of it. Interestingly, we sort of track job activity. It seems that the job activity again is rising month on month at the moment. And look, the businesses I speak to are all suggesting their pipeline of demand is getting busier month on month at the moment. It's not back, it's not where it was, but it's definitely in the right place in terms of the momentum.
Yeah, I agree with that, and our data sort of says a very similar sort of story. Look, the US, the job flow in June was 100% up from an identical job flow in April, May. In the UK and across the group, 47% up. And this month, I think it will trend to almost similar sort of figures to beforehand by the early signals of what we're looking at. I don't think anyone can get carried away by any stretch of the imagination, but I'm hugely buoyed by just the reaction of how business as a whole has reacted to this and how people have adapted and managed to keep BAU on. And I guess the contract space, which is obviously the place you know and love the most, is been really important to this. The flexibility and the ability, particularly around the tech space, of people having to find rapid solutions. We've seen previous recessions, and not that this is actually a recession, but we've seen previous downturns characterized by an immediate return to contract business first. Are you anticipating a similar sort of thing across the businesses you work with?
Yeah, look, I think a lot of what I feel and think about, Toby, is that I look at the historics first and what's happened historically. I just think that there is, for a lot of those businesses, they're going to need to react, but they're going to have to react with a little bit of a higher level of uncertainty, which ultimately means that the ability to switch on and switch off a project and staffing around it would feel like the right thing for a lot of those businesses to do. Have they got the full confidence to fully start trying to find those permanent members on board them, build those teams? There will be some, but I think contract is a good balance. Albeit, there may well be some businesses that see opportunity to find talent at the moment. Particularly the businesses that we support in the creative space. There's definitely a lot of that around at the moment. So I think there will be that balance, but I definitely think that, as ever, the contract contingent flexible staffing piece should be part of a business's strategy going forward. I'm sure that will be the case.
Yeah. And with the squeeze of IR35 and obviously the delays around there, what sort of impact do you think that will have?
Look, I think there will be people that will just have to get themselves comfortable. When I mean people, I mean businesses and both contract folks out there. The overarching thing for us is the propensity towards still a contingent flexible staffing structure within business. I think there is. And I think that there will be some folks that will end up in the inside IR35, if we just use easy language, that will mean that that's how they are working. That's how they are then going to get paid and get taxed accordingly from that perspective. But I think there'll be a route forward where, generally speaking, that there will still be that need and that drive for the contingent staff, and IR35 will just become a new way in which the models will work through over a period of time. Yeah.
Look, one of the other things I'm always interested in talking to you about, and I know you've got a sort of wide network near and far here, is money coming into the fintech space. You've worked a lot with investment companies, VCs, PE companies, etc. Really interesting time for them. I mean, it started off with a lot of doom and gloom coming out of that space, and now it seems to me quite rapidly for people to have recognised opportunity from this. And if you look at a sort of a chart of emotions, there's been a very strong swing from the VCs around this as well. You speak a lot to people in that space. What's been your take on that?
Yeah, I think Toby's really interesting, because if we specifically kind of think fintech, and look, this is the big moment, right, where a lot of these businesses are getting the ultimate stress test, because a lot of the fintechs have come out of the kind of, post the global financial crisis, and they've accelerated and boomed rapidly post that crisis. And many of those businesses have not really had a meaningful stress test on them. So I think that I think it's a really important moment in time for fintech. I think there's going to be some winners and some losers. I think there will be some areas within fintech, particularly where I am around lending, where some of the models will be challenged, as to when they were, super hyped up as to how those models work, and where a lot of the buzz was around lending and how those models work. I think the stress test for those is going to be an interesting one. Because some of them, when you start looking at the balance sheets and start looking at how they fund themselves, does it really work is the question. So I think there's some challenges and a bit of negativity around that, but I equally think for those that can come through this stress test, then I think that's a fantastic moment in time for them in their kind of fintech journey, because this is the ultimate chance to show your business model in really, really stretched times, and stress tests that nobody really put into their businesses. So I think from a capital side of things, look, I suspect valuations and the capital that's coming in will be, that they will be more conservative. But I think they will still find the winners and then find the way to support those businesses, in this current period, and then push them going out. I think there's a lot in the press at the moment as we speak, all the sort of stuff with Wirecard and all these different problems that have gone in.
Wirecard, yeah, I think that's really interesting, isn't it?
I do think that the whole, your selection of your partners is super important. I do think that kind of Wirecard press is not good for any of us in that world. Although, let's be honest, Wirecard was a a publicly listed business. I mean, it was well beyond kind of early stage venture type business. But it doesn't help, and equally it has an effect on lots of other businesses if we're all connected into this ecosystem. But I think still this will come out as an opportunity where parts of fintech can really flourish. They can show their benefit. How are businesses like ourselves and others able to get involved in things like CBILS deployment for the government? How flexible can we be? How can we work together and be more reactive? So I think there's a balance scorecard there that will, have some real successes and some real challenges where some of the business models may not come through that stress testing.
I agree with that, and I think that goes across, across the recruitment industry as well. It's exactly the same story, right? If you can, with every downturn, there's business. We grew through a downturn when we first started up the company in 2010. There's a really interesting time for companies to solidify, to get leaner, fitter, stronger, to maximise how they're working and really move further forward. And this is I think be it fintech or be it recruitment, it's exactly the same message that comes out. This wirecard thing's interesting, right? Because as you say, look, we're speaking in July again, start of July. There's a lot of things that haven't come out of this and really sprung to life yet. And the story is evolving on an almost daily basis. What you mentioned there's going to be an impact for, and it's not good news for people in the space. What do you think are the things that can come out of it, and where opportunity does arise from it? Because we can easily look at the negatives from that, but it also has positives around it. Even around Enron, there were things that became better because of it. What do you think will be better because of the wirecard scenario?
Yeah, I think for me, I don't have super deep knowledge. I mean, I'm reading the same sort of press that everybody else is really on it. I just hope
got knowledge yet, have they?
No, that's very true. I just hope that what can come out of it is that the kind of level of due diligence and regulation that is, they find the right balance, and the balance has got to be that these businesses we should have the right level of regulatory challenge, and to ensure that the fintech community doesn't have this problem, because trust is so important, right? It's so important, to people when you're involved in payments, lending money, people's accounts, data. Trust is imperative, I feel, and that we've got to have a level where you don't have a big heavyweight business like Wirecard that then capitulates things for everybody else that's underneath that. So I think the positive thing is, let's try and find a way that says, where were the errors here? Where were the mistakes? What has really happened? And then let's use that to just improve the quality, improve the standards, improve the watermark around the whole fintech, community, to make sure that we continue to build that trust, and that people can feel confident that users of businesses that aren't your older, more established players in the market, we don't put a fear into them, and it can be positively seen that there is improvements coming along. Because I don't think any business starts out to be bad. I don't believe that, and I think it's the same with fintechs as it is with banks. But the banks historically have made lots of mistakes, and they've obviously had to learn from them. Fintech is no different, but I think the positive thing is that we can, focus on what's going well within that sector and just continue to improve the standards. I think that's something that's got to come positively out of this.
Absolutely agree. I think those sort of driving standards are important, and trust is the key to any sort of innovative area. And I think fintech has done so well with that this is something that just needs to be re-embraced. And actually, if you look at the reaction of a number of the businesses, particularly around open banking, to come in and provide alternative solutions and do that, there's been some businesses that I think have been very, very clever around how they can sort of rebuild that trust and come in and sweep up some of the mess around that as well. And we've seen that in a few areas across the fintech space over this period. You mentioned, look, I want to talk to you about you and obviously you're in a really interesting space around lending and funding and the pressure that's been around business full stop at the moment. You mentioned CBILS earlier on. Tell us a little bit about what you're seeing in the whole lending and funding space and some of the challenges around that.
Yes, I mean, look, particularly for us, I mean, the reality is that we are the primary funder to most of the businesses that we are engaged with. We are their working capital finance solution. So for us, honestly, Toby, when we went into it, it was a genuine moment where the whole team had to focus on what is this stress and how is everything going to operate. There's clearly, like all of us, every business out there had to quickly go work from home. How's that going to work? Does everything work? That was fine. And I think I've pretty much heard every business say that that's worked fine for them. There's looking after your staff and looking after that, and that's not all completely straightforward. But fundamentally, it was get that sorted quickly. And then for us, it's lending in a climate where ultimately you've got this massive pressure on credit and massive pressure on liquidity that's shocking everybody. So for us, it was particularly, we know we have to carry on lending. We know we have to support our businesses, but how do we do that in a safe model for them and for us as a business? And for us, that was a case of just being, looking at our models, looking at the stress testing we'd already done. How was the kind of, the COVID crisis going to challenge that? And how do we just sensibly make sure we navigate our customers and ourselves through that and continue lending? And ultimately, it goes back to that thing I said before. Our customers have just got to feel trust in us, that we're there to support them. Our DNA is always about getting people paid on time, every time, and making sure that we carry on with that. So I think that's something we've done. I think in the wider community, with lending, again, I think it's a case of, just making sure that people have got sensible, business models and confidence around the security and what they're lending towards. I'm glad, I have to say, Toby, I'm glad I'm not in small business unsecured lending. Some of those businesses that have grown incredibly quickly during this time. I hope the folks that have done the stress testing on those businesses really did stretch out the challenges for those. But I think that what they will probably do, and if you connect it to C-bills, is their ability to be nimble, their ability to get to market quickly, their ability to change their models will be the things that will help them through. So they might have to change, and they might have some pain with what they were doing previously. But I do think some of the businesses I know out there that were in, small business unsecured lending, that's maybe a bit more challenging, but it feels like they've reacted really quickly to say, where is the opportunity for them to carry on supporting the economy and find solutions out there. So I think that's the kind of win for them coming through this.
And with regards to the sort of government reaction, and that it probably impacts you as much as anyone else within it. What's your take on that, and how the government supported business through this time? Because I said it before, I think there's been a really robust reply from business all up and down for something so seismic to actually come out of this in the nature of where I think people have done, with the sort of return being quite as pronounced as it looks at the moment. Tell us, give us a couple of thoughts on that, because I know you're a thinker about this sort of stuff, aren't you?
Yeah, I mean, look, just again, I won't go too deep into it, but reality for the fintech guys, the bit that's been frustrating as us for lenders, due to kind of, bigger regulation, none of the alternative lenders, challenger banks, have qualified for any support from the government, which is frustrating, because ultimately we are there providing funding, a lot of us, to small businesses, and we are really in the lifeblood of the economy, and yet we can't get any financial support from the government due to some of the kind of higher level regulatory issues around any of that funding. So that's frustrating for a community of lenders that want to supply funding and make sure that we continue to get the right funding that we need. But I do think, yes, that I think there's been lots of stuff that's been good. Toby, you're like me. I try to find the positive to things. I think people have tried to react really pretty well to this. I think the C-bills, look, it is a broad brush approach. There are some challenges with it. But again, I think that has been something they've tried to execute as best as they possibly can. I think the B-bill stuff, the loan stuff for really small businesses, to get that to market, I mean, it feels like that's been the one product that's been very, very easily accessible to small businesses. We don't do that. We don't do loans, so we can't deploy it. But it feels like that's the one that people have been able to get access to as quick and easy as people would hope. The C-bill side for us, which is where we've got accreditation to provide kind of financing against invoices and asset type lending, that's been a bit clunkier, to be honest with you. I think that it's the right intention, but actually how have they deployed those products to market have been a little bit clunkier. But I do think, let's try to take the positive, I do think that the government themselves have tried to react and tried to be creative around these things. I do think folks like ourselves and the banks have done their best to try and support that. So I think actually collectively that's been good. Personally, I think the government's got to find ways where, how do they think about equity investments rather than pure debt? You know, ultimately there's a lot of debt that's being supported out there by these businesses. Is there any way that they can think about that as a convertible type product, that businesses aren't then laden with debt that doesn't help them when the market comes back? But they're challenging things, and I think folks, generally speaking, are all trying to work together to come up with solutions.
Yeah, I think it's a truly unenviable task, isn't it? That the government have had to try to sort of navigate through this. But I think one of the things you mentioned there is just that this is such an unprecedented time for people leading businesses, and you know, as we talk, this is the 40th of these that I've undertaken through the through the last couple of weeks. And I think that the what I've been massively impressed with throughout has just been the response of leaders throughout it, the care, the entrepreneurialism, the innovation, the pivoting. You know, whatever angle you look at, people have reacted and stayed calm. You know, under enormous scrutiny and enormous pressure, looked at everything in between it and done a really good job. So I think it's been, there's a load of positive things, and as we move out of this, I hope the legacy is that people are a hell of a lot better and businesses are a lot better, and people are recognizing the efficiency gains that can be got through this. Richard, I know there's so much that we can talk through. So I want to look at a little bit about Sonovate itself as well, and you as a leader of that business. You and Damon have gone through phenomenal growth over recent years, and taken a business that I think has been utterly phenomenal in everything you've achieved. You've won awards and seen growth and gone into new areas, and the product itself has just come on leaps and leaps and bounds. But tell me a little bit about how this is this is a unique leadership challenge. Tell us a little bit about how you've dealt with it, how the team's dealt with it, and some of the things you've learned from it as well.
Yes, look, I mean, from our perspective, I think the first thing we look to do is focus on our team. That was the first thing that we really wanted to make sure that we got right, because look, without our team, Sonovate's business doesn't exist. And we've got two centres. We've got a London centre and we've got a Cardiff centre. And that's the first thing that we needed to make sure that we focused on, because we recognised very quickly that we asked the whole business to work from home very rapidly, like we all did, and then suddenly the reality kicks in a sort of week or so down the line that you've generally got people that are they've got kids running around, they're literally at the edge of the kitchen table trying to do really, really important things for the business, and with also a big customer base, and our customers are in kind of shock and fear and questioning along that journey. So the first thing that we tried to do was really focus on our team and focus on a real high level of clear, honest communication to those guys as regularly as we possibly could, because we felt that as a foundation was going to enable us to do the right thing by our customers and the right thing by our investors, and see ourselves through that. So that's the thing that we've looked to do. We've tried to obviously look at how it's impacted the business, and how do we sort of change ourselves accordingly and react, because look, we were a business that's designed to go forward. We've grown every single quarter since our inception, and some quarters really, really meaningfully. So to have a kind of quarter whereby ultimately our kind of operation and our demand has basically gone backwards in terms of the activity level, was really, really strange for us. And we were not designed remotely as a business that talks about maintenance or reacting to kind of downward trends in anything. So I think culturally, again, we've had to try and think about the language that we use, but first and foremost as well with that is look at your values in your company and see if they really stand up. And for us, they were just fantastic that those things kind of really stood through. And one of our key ones is that, that we, as a business, we look to challenge ourselves. We look to be innovative to solve solutions. And fundamentally, it's because we do give a shit. And that's something that we've driven through with everyone in our business, because we just knew that as a key lender to our customers, this was a time for them to be nervous and concerned potentially about their own situation. So that's been important. We like data, so we obviously then look at the data and look to try and prepare the business as best we can. Probably the unique thing we've learned, Toby, even more than anything, is how do we manage the data in an even shorter period of time. So looking at stuff really genuinely on a kind of daily, weekly basis and make big decisions off the back of that. Because I think we all believe in having a strategy and having objectives and having maybe a 90-day cycle, which is what we work to. But we thought, well, we kind of have to tear up a load of those plans and go, okay, we got 90 days. Let's break that down into, our classic 12-week cycle and huddle every single day on that data. So that's probably been the big changes that we've used to kind of navigate the business through, this challenging time.
Yeah, congratulations to you for it. I think it's there's a lot of really interesting things around that. Communication is always key. The values thing I'm fascinated by, and it keeps on coming back up. The businesses that I think have really done well through this have seen those values sort of come to the fore. Absolutely. And I think sometimes when you're BAU and in the thick of things, those values can sometimes, and you're going through super growth as you've been doing, those values can kind of just get put to the back a little bit. Last week's episode, we spoke to James Kerr, author of Legacy, on the show. And James was talking about the importance of values through this. And I think it's just such an important part of it. And no surprise that you've anchored them to come through this with it as well. Richard, there's so much more, and I'm sure we're going to have to do other shows around this as well that we can come back in. And I think it'd be really interesting in a couple of months' time to revisit this and have a look at the data and where contracts heading as a whole, and everything that you guys have been doing throughout all of it. Just from my perspective, as someone who's used Sonovate, pretty much since the very early days of your company, just the journey that you guys have been on has been phenomenal. And a massive thank you from me and the team for everything you've helped.
Well, likewise. I mean, look, you were one of the very, very early kind of guys that put faith in a very early, fintech business. So look, we have to thank you, and obviously, that we've grown because the likes of businesses like yours have grown rapidly. So no, look, I think we equally thank you for giving us the faith early on. And look, we've wanted to make sure we care and support your business and others. So we grow off the back of doing that bit well. So no, equally thank you.
Oh, well, good man. Listen, there'll be people watching this who are interested in what you say. How best to follow up?
Hey, look, I'm easily available. I'm Richard at Sonovate. I think people can find me on the normal channels. Look, we're here to try and help them. We've got some new products coming to market around funding. We've got a CBIL solution now. Permanent funding is not something we've talked about. It's not something that maybe people knock on the door, but there's a new product coming to market there. So if people want to talk to us about that, get in touch. We are here and we are trying to support people through this.
Well, you've done a great job on it so far, and I'm hugely impressed with the beard. Looking forward to seeing how that develops after lockdown. And Richard, as always, nothing but an utter pleasure talking to you. Thanks for sharing all the wisdom. Thanks for sharing the story. And we'll see you soon again on another episode of Fintech Focus TV. Thanks very much.
Thanks very much for having me, Toby. Take care.
See you all soon. Thanks a lot.
Bye. Bye.